AI plays a crucial role in national security and scientific research. China has rapidly emerged as a global leader in artificial intelligence, driven by substantial government support and rapid technological adoption. The State Council's Next Generation Artificial Intelligence Development Plan was introduced in 2017, outlining China's ambition to become the world AI leader by 2030. One of China's recent advancements is DeepSeek R1. It's an open source AI model that rivals a leading model from American organization OpenAI. It's made by this organization called DeepSeek from Hangzhou. And the R1 model offers both the reasoning capability and internet search at the same time, whereas ChatGPT's reasoning model called the O1, it cannot search internet. And it also requires a $20 monthly subscription fee to even use it. In contrast, the DeepSeek R1 is free to use. And following the release of this R1 model, the DeepSeek iOS app quickly became the #1 app in US and 51 other countries, surpassing ChatGPT. But recently, ChatGPT reclaimed the #1 position in US, developed at a fraction of the cost, estimated to be in range of 1% to 5% cost of a leading OpenAI model. DeepSeek R1 has demonstrated superior performance across various benchmarks, underscoring China's growing strength in AI innovation. The launch of the DeepSeek R1 triggered a significant sell-off in American tech stocks, with NVIDIA experiencing a 17% single-day decline, wiping out $560 billion in market cap. And this sell-off was largely driven by investors' concerns that advanced AI models in China may no longer require a massive amount of high-end GPUs for effective training. So apparently China is making waves in the AI sector, suggesting that Chinese AI sector could thrive in the future. So for those looking to capitalize on these trends, let's explore the best way to invest in Chinese AI stocks. So to invest wisely, we need to first identify the major players in Chinese AI sector. The most prominent AI company at the moment, like I said, it's DeepSeek, and it's a small startup founded in 2023 as a side project of the founder of a Chinese hedge fund called High Flyer. But is DeepSeek investable? Unfortunately, no. DeepSeek remains privately held, though it has strong backing from Chinese tech investors. If it goes public, it would become one of the most anticipated AI IPO. So are there other ways to invest in Chinese AI sector? Yes. Okay. The way is to invest in the largest technology firms in China, because they are the dominant forces in AI research and commercialization. And these industry giants have the resources, infrastructure, and data access necessary to drive large-scale AI advancements, positioning them at the forefront of China's AI ecosystem. So the first stock I'm going to talk about is, of course, Alibaba, because Alibaba is advancing AI through the Alibaba cloud, and it's developing the Quan model for business applications. Its latest model is called Quan 2.5-Max, and is publicly accessible and claimed by the company that it's actually more advanced compared to DeepSeek R1. And actually the model is available for public to use. It's if you go to chat.quanlm.ai, you can give it a try. So the company has a strong AI presence in the e-commerce, logistics, and cloud computing. In the first half of 2024, Alibaba's AI capex reached approximately $23 billion yuan, which is $3.2 billion in USD, marking a 123% increase from the same period in the previous year. So for investors, Alibaba is easily tradable. It is listed on New York Stock Exchange under the ticker symbol BABA, and it's a sponsored American Depository Receipt, or ADR. It means that it complies with the SEC reporting standards, and the stock has declined 52% in the past 5 years. But it's up 44% in the past year. Number 2, we have Baidu. It's leading in autonomous driving and AI-powered search engine. ErnieBot is Baidu's answer to ChatGPT. It's a major player in China's LLM race, and it's primarily available for users within China. To access the chatbot, it requires a Chinese phone number. So in the first half of 2024, Baidu invested approximately 4.2 billion yuan, around 589 million USD, in AI infrastructure, marking a 4% increase compared to the same period in previous year. So it seems kind of low in terms of capex for AI compares to other Chinese tech companies. So Baidu is listed on NASDAQ under ticker symbol BIDU, and it is also a sponsored ADR, and its 5-year performance is down 32%. And its 1-year performance is down 15%. So number 3, we have Tencent. Tencent leverages AI in gaming, cloud computing, and social media, making it a key player in China's AI landscape. It developed a Hunyuan LLM. It's an open source model capable of doing text and image generation, and it's specialized in creating high resolution 3D model, and it's particularly beneficial for game development by streamlining the creation of 3D assets. So in the first half of 2024, Tencent significantly increased its capital expenditure in artificial intelligence infrastructure. The company's capex reached approximately 23 billion yuan, around 3.15 billion US dollars, marking a 176% increase compared to the same period in the previous year. Tencent is listed on the OTC market under the ticker symbol TCEHY through unsponsored ADR, and the company is up 7.7% in the past 5 years, and the company is up 48% in the past 1 year. So it's very clear Tencent is the winner in terms of the stock performance. Number 4, we have ByteDance. It's the parent company of TikTok. It's actually anticipated to be the largest capital spender on artificial intelligence in China. It plans to spend over $20 billion US dollars in 2025, approximately 82% increase from $11 billion in 2024. Unfortunately, ByteDance is not publicly traded, meaning the retail investor cannot directly buy the stock. So all 3 stocks that we mentioned that are investable, right? Alibaba, Baidu, and Tencent, they can be bought directly on the Hong Kong Stock Exchange instead of using the ADR method. But not all stock brokerage people use offer access to Hong Kong Stock Exchange, and since they are traded in Hong Kong dollar, investor, if they want to invest in Hong Kong, they have to do the currency exchange. This table shows you the comparison between the 3 companies in terms of their market cap, PE ratio, forward PE ratio, and the implied earnings growth percentage calculated from the PE and forward PE ratio. So this chart shows you a comparison of the 10-year data of revenue year-over-year percent growth for the 3 companies. We have blue Alibaba, we have the yellow Baidu, and the red Tencent. As you can see, the strongest revenue grower is actually Tencent. It's up 7.4% from previous years, but it's noticeable that the three company has been on a downtrend in terms of the growth in the past 10 years. And this chart shows you the revenue year-over-year percentage growth quarterly chart. And obviously the red Tencent is the winner over here. And this chart shows you the 10-year annual net income chart. And Tencent in red appears to be the most attractive in terms of net income. And this chart is the 10-year quarterly net income chart. And this chart shows you the 10-year annual free cash flow. Again, as we can see, Tencent is the strongest in the free cash flow. This chart shows you the 10-year quarterly free cash flow. I think it's important to mention the risks and considerations on investing in Chinese AI stocks. It comes with risks, including regulatory uncertainties, right? As the Chinese government enforces strict data policy or privacy laws and AI regulations that can impact company operations. And there is also geopolitical tension between US and China that may lead to trade restriction, sanctions, or even the delisting of the ADR. So because Alibaba and Baidu are downtrending in stock price in the past 5 years, it carries a lot of risks of catching a falling knife. You don't know if they're going to continue to fall, right? But however, for investors with high conviction in China's AI growth, these stocks could present a long-term value. But I think the investors should approach them with extreme caution and proper risk management. And I think it's also important to note that the US AI companies remain the global leader in innovation and capital expenditure. The US mega cap tech firms, including Meta, Amazon, Alphabet, and Microsoft, are expected to outspend Chinese companies with $320 billion in AI-related capex projected in 2025. So despite China's rapid advancement, there is no evidence that the US AI sector is being disrupted or is becoming obsolete. The US maintain a larger AI ecosystem, leading in semiconductor companies, cloud AI infrastructure, and top AI research labs. However, US companies may need to adapt and learn from DeepSeek's innovation in building highly efficient AI models to maintain their competitive edge. But good news is that DeepSeek's R1 model is open sourced. Thank you very much. Please don't forget to like and subscribe.